G'day, Binanceans, and welcome to this week's Binance Beach. It's been a pretty crazy week in the markets. We've had a lot of red and a lot of volatility. So we're here today to talk about whether the bull market is over for 2025 and we're done and dusted, pack your bags, go home, come back in 4 years, or whether we've still got plenty of upside to this bull run. I mean, there's almost a question about whether we've had a bull run. It hasn't felt like a really traditional kind of run up just yet. Maybe that's to come, maybe not. But joining me today to answer all these questions and more is Joe Shew from the Crypto Consulting Institute. Joe's got the #1 rated crypto education company on Trustpilot. Joe, mate, thanks so much for jumping on.
Thanks for having me. And yeah, really happy to be here and help investors understand what's going on and how they can approach this market because this time's different. And I do want to talk about this time being different as well. So yeah, let me know where you want to dive for this session, mate, and what questions you have for me.
I mean, maybe that's a great place to start. Like, is this time different? And we can kind of launch from there. We'll start with a super brief kind of price update. Bitcoin has fallen this week, down 6% to $101,000. We're holding that kind of key six-figure psychological level at the moment. We did dip very briefly to 99. I would love to snipe 99, but I missed that. ETH's down at 3.3. BNB's come down to 950 after its recent all-time highs above 1300. I think it hit like 1365 off the top of my head. Don't hold me to that. Solana's at $156. XRP down $2.22. So a lot of those kind of top 10 coins have seen have erased some of those recent market gains. But yeah, let's kick right into the guts of it. Is this cycle different, and what makes it different, Joe? What's your take?
Yeah, well, in short, absolutely it is. And I do want to point out as well that every cycle has been different. Whilst we think the cycle's been the same in this 4-year narrative, and everyone thought before it was the Bitcoin halving that was really driving the cycles, and then we realized it's the liquidity and business cycles more so that are driving it. That's exactly what we're seeing now. But in the 2017, we had one top. We had that one huge run up that lasted really to the end of 2017. And the second major cycle, and I call it the second major cycle because the first one back in 2013 wasn't really a typical cycle, early stage of the technology. 2021, we had a double top, and I think that caught a lot of investors off guard where they didn't anticipate a pullback mid-year. And that was due to a lot of different style of market participants. And that wave has continued where now we're dealing with much more sophisticated investors. 80% of circulating money in Bitcoin is held in wallets of $1 million or more. So we're not dealing with small retail participants that was leading the charge in 2017. We're now dealing with a completely different dynamic of market where we have large institutions, we have the ETF situation happening, which accounts for about 20% of the market. Retail participants only really are equating to, based on on-chain data, around 10% of the market now. So it is a very different cycle that we're in. The liquidity cycle is also different. The easing or elevated interest rates that we've seen is different to past cycles as well. So there's many different factors that are shaping a different dynamic in this market. And that's what we have to consider as to where are we at right now and where will we be over the next 12 months.
Yeah, and I think that is shown in the slow kind of grind up that we've had, in the lack of a major alt season that we've had. I don't know if the altcoin index on CoinMarketCap has even really got going at any point this year. We've had little areas of the market go off, like we had memes at the start of the year. Then there was, some dexes that did quite well. And now, there's some privacy coins that it's starting to make some moves, but we really haven't seen that kind of buy anything number go up, crazy alt season by any means. And I feel like absolutely, as you say, that's a reflection of how liquidity is flowing into the market. And instead of seeing that classic retail rotation from Bitcoin and ETH, who start a rally down the down the list of coins of market cap, and further out on the risk tail, we've really seen a lot of that capital come in, park itself in those major tokens, and then stay there, not necessarily rotate down through through the rest of the market. What
Yeah.
are you? Yeah, do you have any thoughts or comments on
Yeah.
that?
Yeah, absolutely. So there's the maturity of the market has changed. So retail investors were the speculators. I want to invest $100 today and get 10,000 tomorrow, which is the reality of the expectations and the misaligned expectations of most retail participants. And that's why they've been burnt in this cycle in particular, because they've been speculating on outperformance. But the strategy and the key strategy, I think, to play is Bitcoin pairs. If it's not beating Bitcoin, why are you in it? And if you just base for more advanced investors, if you just based it off of that, it's really a simple approach that could have saved you a ton of money, because you would have suddenly realized that most of the altcoins aren't actually outperforming Bitcoin, and they've been downtrending for an extended period of time. There has been altcoin seasons against Bitcoin's performance, but it's been very short-lived. So I think the main message here for retail investors is adjust your expectations, because the market dynamics different, and actually invest in what is performing rather than what you want to perform. It's not like a game of poker where you can kind of win the hand by bluffing. There is no bluffing in this market. So that to me is it's just the basic premises of where we're at. And the large scale investors, they demand where the ETF flows are, or where there's safety and consistency and approval of regulation, not these, oh, this could perform well kind of crypto that they just have no interest in.
Absolutely. They're way further up the risk curve, which is funny a thing to say in crypto, but absolutely they're looking for those structured, regulated products, and they're going to be delivering consistent flows, and not the kind of random, FOMO, fear and greed driven buys that the retail market will demand. In that case, as a retail investor, and I think the most interesting part for me of this cycle is how traditional markets have come to crypto in as much of a way as crypto has gone to traditional markets. And by that, I mean, from a volatility perspective, we're now at a point where one or two people on Twitter can tweet and move billions of dollars worth of market cap, not just in crypto, but in traditional markets too. And so we find ourselves in this place where there's so much information going out so quickly, and then the market, both in crypto and in traditional markets, is responding so fast to that. How do you keep up with this as a retail investor in this kind of environment where crypto's growing up a little bit, but a lot of the other markets have kind of come down to crypto's level? How do you keep your head? How do you keep your funds to a certain extent? Like, how do you manage yourself through this market that we find ourselves in?
Yeah, good question. So I think there's a number of ways to answer this. From my perspective, being a crypto education company, I think that if you have the right support and guidance and the right frameworks in place, and knowing where to get certain information from, then it can position you really well to enable you to be proactive rather than reactive to the market. Most people wake up in the morning, they see their portfolio down 5-10%, and they're like, what happened? A great example would have been the liquidation events that we saw not that long ago, where 19 billion plus was wiped from the market. In the lead up to that, 3-4 weeks ahead, it was clear for me to see when there was 13 longs for one short, and a complete imbalance in the leverage books and liquidation levels, that we were going to see a massive pullback. And if you understand where to go and access that data, all it took is one catalyst. Sure, that was from the tariff comments of China, etc., with Trump, but the market was looking and waiting for a catalyst to completely reverse and turn. The data was already there. showing that the market reversal was going to be in place. And that for me is the depth of knowing where to access this data and information to help and enable you to have foresight, rather than say these triggers are happening and the market reacted because of the tariffs. Well, that's not necessarily true. The leverage levels and the liquidation was telling us with a clear indicator weeks before that impact actually happened that something was going to shift and change.
Yeah, 100%. I totally agree. I heard this discussed on another show just recently, but it's a question I'd love to put to you. Are retail investors now actually advantaged versus institutional investors because of their one, speed to market? As a retail investor, you can act on your own decisions and instinct quite quickly. But secondly, because of the amount of information that's now available, how widely available that is, and the information asymmetry that existed in traditional markets, like you go back 10, 20 years, think about press releases, or the way that earnings were released in companies. Like, the information flow is so totally different now and is so readily and openly available. And when you're investing, obviously, you believe you have information, or you believe you have an advantage over the rest of the market, and that the rest of the market will meet your price expectation above where you buy. And so, that information asymmetry maybe now is not as much of a thing as it once was. So that's my question for you. Are retail investors now equal to institutional investors? Are they now advantaged compared to institutional investors because of their speed to market? Or do you think the institutions still have an advantage over retail?
It comes down to the individual. There's retail investors that think they know what they're doing in terms of, I've got this piece of data and it's going to mean this as an outcome. And then there's retail investors that actually get the market. They get on-chain, they get technicals, they understand the macro. They maybe have things that are automated to drop information through so it can be auto-analyzed by AI. There's all different variations of a retail market participant in comparison to someone who's much more sophisticated, who has millions of dollars spent on data sets and tools and AI advancements. So I don't necessarily still think that the general retail participant is advantaged in any way, because they maybe don't know how to extract the data, to analyze it properly, even to input it into AI. AI is phenomenal if you know how to use it properly. So I still think that there's a discrepancy where much more advanced retail participants are competing against new market entrants, or those that are being misled by other influencers on YouTube to buy altcoins when they probably shouldn't be. So it just comes down to, and why I'm so passionate about what we do at CCI, it comes down to education. If you can understand how to access those tools and then position yourself well to consume the information and be able to act on it effectively, then sure, you're going to be at an advantage and start competing with the big boys. But if you're watching YouTube videos, or you don't have a clear strategy or know where to access and interpret that data, then it becomes overwhelming. Then it becomes confusing because you're hearing different data here and there. That's why I don't follow any crypto people. Zero. I follow data. But the difference is I know where to go and access that data, and I know how to interpret it. But I also recognize that most retail investors are working a full-time job. So how do you extract that data and get it delivered to you in a really condensed way that you're able to consume it and act upon it? And that's what we're helping bridge the gap with.
DYOR financials. Make sure you find your data, and keep your head cool, keep your mind over market. Where are we in the cycle currently? Is the bull over? Is it going to keep ripping? Is there even a cycle anymore? What are your predictions for the rest of the year?
Well, now that we're very clear on what's driving the market, that's what we need to watch. So if quantitative easing or tightening is a factor, which we're starting to see that there was quantitative tightening, and now there's not necessarily an easing, but it's more of a neutral baseline. And that's what we have to watch very, very closely, as well as the business cycle dynamics like the ISM, and seeing, is that improving, or are we still in that tightening phase? The interest rates obviously have an impact on this, which is we're seeing that gradual decline. And what Jerome Powell says, and he's been very consistent in his comments, and I actually really respect the guy because I think they have done a fairly good job of the situation. If inflation levels continue to escalate, they can't continue to cut interest rates, and they need to manage that. But if the unemployment rate's still impacted, then they need to cut interest rates. So he's waiting for more data, and that's his ongoing consistent comments. Sure, we've taken this action of cutting interest rates, but now we need to observe X, Y, and Z before the next decision in December. So I think it's not as simple as just saying, or I would ask people to stop thinking in ways of cycles and start focusing on what is. And when they start focusing on what is, meaning data, that's going to help them to make much better quality decisions. So as an example, things that we're watching for market tops, price predictions are wrong, and any influencer giving price predictions is misleading people. Predictions are irrelevant. What is relevant is a break in market structure, a loss of a weekly close below the 50 moving average, or a loss on the monthly below the 10 EMA, a downtrend in an ongoing downtrend of momentum indicators of RSI, stochastic RSI, MACD convergences. That's the thing that we need to be watching to understand tops and bottoms or change in trends, and also not having an expectation that you're going to sell the top. If we do lose this 100K level, if we do get a weekly close below certain levels, if we do get the 10 on the monthly close below, and we lose this and we violate the ongoing uptrend structure that we've had now for ongoing months, then you want to start risking off. And that's what smart investors do. Rather than say, I'm going to try and sell the top, and they never sell the top and they hold it all the way back down. If you sell 20% within the top, you have done an incredible job. Where we're so tied psychologically to greed of, oh no, I must have this target, or I was supposed to do a 10x in this bull run and I'm only at 2.5x. And it's really changing the way that people are operating in this space. So if we can let go of that and realize that it doesn't matter how good your strategies are or how good the information is that you're getting, what really matters is you being able to take that decision and actually take action on something. That's what's going to change the way that people participate in this cycle. So hopefully it's more of an in-depth and roundabout answer to the question, but I think it's just letting go of all expectations and what is, and playing what is, and being able to take action on what is.
There was an expression that came about in 2021, 2022 at some point. I think someone even named a show after this. It was crypto's macro now. How do you think about macro versus technical analysis, and how much attention are you paying to macro at the moment versus how much you're looking at your charts and data, for example?
Yeah, really good question. So to be a successful investor, you need to have a clear image of what's going on. If you're a technical investor, you have one piece of the puzzle. If you're a macro investor, you have one piece of the puzzle. If you're an on-chain investor, you have one piece of the puzzle. If you're a sentiment investor, you have one piece of the puzzle. If you put multiple pieces of the puzzle together, you get a clear image. So I don't necessarily say or outweigh anything over the other. I say what's happening here, 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 here. But all of these pieces have a central link, and the central link is us. And I just wanted to mention that again, following on from the previous point that I mentioned. It doesn't matter how good the information is that you're getting from all these areas. You have to be able to interpret it well and take action upon it. So it's really about having a super clear image and an overview that enables you to make better quality decisions. If you get multiple data points and multiple confirmations, that's going to be way better than having one data point and one confirmation.
Great answer. Any closing thoughts so far, or any closing thoughts on the market at the moment, or what people should be kind of keeping an eye out in the next coming days or weeks? What might move the market from here? Yeah, closing thoughts for our listeners.
Yeah, a few different closing thoughts in different ways. What I would say is realize that investing is a game of you. And if your growth and your journey and your learnings and your outcomes, if you're able to up-level yourself with your relationship to money, your relationship to the outcomes, and the lack of attachment that you should have to material possessions, and realign to freedom. Why are you investing in cryptocurrency? What outcomes do you actually want? What's your focus, and how certain are you that you can achieve them? Because you're not going to stop until you do achieve them. That is the difference between the outcomes that most people achieve. People get into crypto because they think they can make a ton of money. They show up, they realize that it's not quite what they thought, and they don't hit their goals, and then they're like, crypto's bad, or crypto's not for me, or this market's too difficult. If you completely shift your alignment and expectations, and therefore the way that you operate and engage with yourself, which the markets are an extension of yourself, then you start to realize very different outcomes. Most people haven't made money in this bull market. And I call it a bull market because Bitcoin was down at 15K not that long ago. And now we're over 100K. People are saying there's not been a bull market. And I'm like, well, I've made a ton of money. Yeah. And the reason that I've made a ton of money
it's funny. It's so funny, isn't it? It's amazing the bias we have compared to these crazy kind of times in previous years, and how high the expectation of performance really is.
Absolutely. So that's why I'm just helping with this comment. Market commentary is almost irrelevant because we're the one taking action on it. So what I would say to anyone and everyone watching this is basic things like, what is your morning routine? Do you get up and look at the charts and make decisions from there? Or do you get up, you do yoga, you meditate, you go for a swim at the beach, you focus on your affirmations, you're focusing on up-leveling yourself? I don't look at the charts until 10 a.m. I have not looked at any technology typically, unless I'm doing an early podcast, until 10 a.m. I just don't do it, because when I interact with the market, I am interacting from my highest level, my highest state, my highest self. And that is the difference between people that make money in crypto and people that are falling into crypto and reacting to it. So rather than market commentary of where we might go and what might be, I've already said the key things that you should be watching instead of trying to price predict. Focus on you first and realize that that is the core foundation of your success, not your strategies, not what someone said to focus on this data set. It comes down to you.
Touch grass, guys. Be your best selves, and your best trades will come from that. We've got a cool activation happening at AusCryptoCon, which kind of follows that mindset approach a little bit. I look forward to sharing that with you, Joe, and with everybody else. You'll be at AusCryptoCon too, won't you, Joe? You're speaking.
Yeah, exactly. Yep.
Awesome. And that is one of my call outs for this week, guys. Please come find me and Joe and the rest of the Binance team at AusCryptoCon. We're going to be having a great time. There's a discount code for tickets in the YouTube description. We've got Richard Tang, our global CEO, Rachel Conlon. We have Jack Robbo there, and a bunch of other really interesting and exciting people. But thanks for taking the time, Joe. That was a great app.
Thanks for having me, buddy. Appreciate it.
Cool, guys. Have a great weekend, and I'll catch you next week. We're going to have Rachel Conlon on the show for some exciting announcements about AusCryptoCon and Binance products that are coming to market as well. So please make sure you like, subscribe, and of course, let me know who else you'd love to have on the show. Have a great weekend, guys. We'll catch you on the other side. Bye.
Bye.
Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance. DYOR Binanceans.